Welcome back. You're watching The Money Show on ET Now. I'm sure many of you are busy paying down the EMIs of your home loans. It seems like a really long time that you've got to pay it. Some loans go on for a decade. But the environment around us has changed quite drastically, obviously, in the last 1 year. It has led to interest rates as well falling quite significantly. Many of you may have already seen that reflect in your EMIs. The EMI that you were paying last year maybe maybe much higher than what you may be paying right now. So there has been a dip in your EMIs. But there are still many ways in which you can reduce your EMIs. You could perhaps also be on a different kind of loan. To understand all of this, I have with me Anshuman Mishra of loanada.com. Anshuman, thanks so much for joining us today on ET Now. Let's start off by talking about some of these tips on how home loan borrowers can reduce their EMI. Last year, the government as well had introduced new kinds of external benchmark loans. So share with us some of the tips. Can they help reduce the EMI?
So Mubina, I would like to start off with when a customer is having to pay EMIs, it is not just home loan. So home loan is the first one it starts with. The second EMI that a person is paying is for his car, the auto loan. Third EMI somebody is paying is for unsecured salaried loan. And the fourth installment somebody is paying is for the credit card. So if you just see the overall packet of what people pay for their interest, obviously home loan is the largest chunk, but you have to understand that home loan is the cheapest. So one tip which we had earlier discussed is that as you had also mentioned that last time, that we should link it to the RBI linked repo rate. So what's happening is that historically all these home loans were taken around 2005 to 2010, but most of the time a lot of property transactions happened. So from then to now, everybody is linked to the bank rate. So which is the MCLR rate which the banks had. Subsequently, in the last 1.5 years, when the RBI came out with the guideline to link it to the repo rate, the RBI linked repo rate. So what the bank said, as you see, a lot of these discretions or the instructions given by the RBI, when the banks have not been doing it in letter and spirit. So they just say that, okay, the customer will come to us. When they give us an application, then only we will change it to the RBI linked repo rate. Or even if the rate of interest has gone down, so the repo has gone down, even the bank rate has gone down. Forget if the customer has not done it with the repo rate, he's still with the bank rate. But in that case also, if a customer, if RBI reduces the rate, the customer has to go to the bank and make an application, then it will be reduced. Now you see the quandary, when the rate of interest, say RBI increases, that time banks don't ask the customer whether to a permission or so. So the first thing you have to do is go to the bank and request to shift your loan from RBI link, from your bank rate to your RBI link rate, which will have a difference. So in general, we see around 15% is the difference of EMI. So suppose you're paying a 1 lakh EMI, your EMI will become 85,000. Suppose you're giving 50,000, it will become 15% less. So that's a substantial chunk which you miss out if you don't ask the bank anything. So that's the first thing. The second part is that if you take your auto loan is not something to be changed because that is not a floating rate interest, and that's around 9 to 10%. So that's generally left out of this purview. The third is this unsecured loan, which costs around 11 to 14%. So what I suggest in these unsecured loans is that as the last time, I think in June, in April, when we had a chat, I had given a conservative view that today, instead of closing your loan or to reduce your EMI, you should have another line of credit, which is like a medical exigency, or if you're, there's a lot of job insecurity. So you should have additional line of credit. So I would recommend that when somebody has got an unsecured loan, salaried personal loan, shift it from a term loan, which is a fixed tenure loan of say 5 years, which your amount comes in, to a overdraft facility. So overdraft facility, some NBFCs are giving. What happens in that is, you just have 10-20 lakhs as a amount as a balance, which you can draw down in a medical emergency or in a, suppose you are out of job or something. And the fourth and the most important is a credit card, which generally doesn't get discussed. So credit card is at 41%. So first you have to repay that in full. But I also recommend, Mubina, that credit card is the easiest loan sanction facility. So take extra 1 or 2 cards which have 1 or 2 lakhs up to 5 lakhs limits each, and keep it for your medical exigency, any family exigency, anything which is required, and don't use it. So the first I will go with the reverse. First, pay a credit card of 41%. Then shift your personal loan from a term loan to an overdraft facility, which people like, let's say, Bajaj Finserv and all are giving. Or second, coming to your auto loan, you leave it as it is. And home loan is not something to be closed, because home loan, what happens that one, it is the cheapest loan. So around 6.6 to 8%, depending whether you are telling the bank. And it also has income tax benefits. So like Section 24 or Section 80C, you have a lot of benefits. So home loan, do not close. Credit card, close. Personal loan, close. And in home loan, go to your bank and request, because like we had discussed, that if your credit rating goes up, your rate of interest does not go down. So that is another discussion which I wanted to have with you.
All right. So car loans, it's a fixed tenure loan. It's not really linked to the repo. So, there's not much wiggle room in terms of savings over there. But home loan, if it is linked to a bank rate, then change it to the RBI linked repo rate, which is a product that was introduced by the RBI, and they asked banks as well to offer it to customers. Given the fact that we are in a low interest rate environment, it can definitely go a long way in helping you save money. Anshuman, you did not mention credit score. We often say that, ensure that you keep a healthy credit score so that getting a loan at a lower interest rate is possible and it's easier. What's the role you think credit score plays over here?
So, Mubina, I purposely did not mention that in the first round when I was, telling people about, what you have to understand is that the credit score, or like, the RBI has given a nudge to the banks that, if somebody's credit score is improving and they are repaying the loans, please reduce the rate of interest and so on and so forth. But let me assure you, credit score is, of course, is important. If you have a bad CIBIL, you have a default, you have a card outstanding or a settlement of a loan, obviously you will not get a loan. But once you have a 750 or 725 plus score, or you have an 800, so there the bargaining power of the individual with the banks is more important than the credit score, unfortunately, which should not be the case. Somebody who's a good borrower has always been repaying is one thing. Second, see, credit score historically has a problem. So that when you go to a bank, let's say you go to a bank, or anybody just joined a job, 22, 23-year-old goes to a bank, they have something called a 0 or a -1 CIBIL score, wherein they don't have any credit record. But I will just give an example of, I have a maid, I have a driver. Okay, the maid always is taking 5,000, 10,000 always, and the whole salary is getting rotated, and she's always in debt. So I know her track record. That's Whereas my poor driver, he's never taken a loan from me. And one fine day, he comes and asks me for a loan. Do I give him or not? Now, you come to the bank's perspective. If I have not taken, let's say that person made is A and the driver is X. So in the bank's credit parameters or retail lending parameters, A is a safer bet and X is not. Because they're saying that the person who's always taken a loan and rotated it and paid off, we know how they will behave. And somebody who's never taken will get a high rate of interest. So imagine the way the banks see, or the way RBI sees, it's just not working, in terms of the delivery mechanism. The policy may be fine. So I would suggest that if you have a loan from, say, X bank, like an Axis or an HDFC, you do a balance transfer. It's only when you show that you have a bargaining power rather than your CIBIL score, they will give you a lower rate of interest and reduce your EMI, or give you a higher amount and reduce the charges, which are very important. So it's very important to compare and contrast. Like an aggregator loan does that specifically. That it's quite funny, but somebody who has an 800 CIBIL score could be getting less loan amount, higher rate of interest, higher charges than somebody who has a 725 CIBIL score, notwithstanding what RBI has told these banks. So my first suggestion, as I told you, that to reduce your EMI, first go to your bank and ask them to shift to RBI link repo rate for your home loans. Second, you just take your file or case to an aggregator like us or any other bank and ask for a loan. Once they get a request for a statement of account or a balance transfer, then all banks, irrespective of your CIBIL scores, they will start reducing a loan, because nobody wants a customer to go, because it costs any bank 4 times the cost to acquire a new customer than retaining the existing. So my advice is that credit score is important, but please go and bargain with different banks and don't let your loan go on and languish with any existing old bank at a high rate of interest.
Well, while numbers, of course, do have their magic, a credit score of more than 750 always is a good thing. But according to Anshuman, at the end of the day, you do need a good bargaining power. You need to go out there, and speak with your banker about terms and conditions. That, according to him, does go a long way. But of course, if you have a good credit score, it will give you an extra edge when you go bargaining as well with your banker. Well, with that, we are completely out of time. Anshuman, thank you so much for joining us with those simple and small tips on how you can ensure that your next few EMIs are lower in amount owing to interest. With that, we're out of time, so we're going to wrap it up on the show as well. Thanks for watching.